strategic Bitcoin reserve, and there'll be some favorable things for other cryptos, but they're not in the reserve, which I think is the right approach. But either way, you either have a Bitcoin only reserve or you have a crypto reserve, and it has some component of altcoins in it. But I think the most important thing that we should all be pushing for is not to lobby for a Bitcoin only reserve, but to focus on the rule set and the criteria for what is actually included in there. And I took a stab at it a few days ago, I think Sunday night. But if you reason it out from first principles thinking and you think what should be in this thing, I think you end up with a list of just proof of work coins. And that's not that bad because it's still based off of something. It's not just like Ripple printing billions of tokens by pushing a button. And I think another criteria has to be that these things must be commodity-like and neutral. So they can't really be centralized tokens that are made in the US because then no other country will want it. And that sort of defeats the purpose of having a strategic reserve, which no one else wants, right? So we'll see. I would think that they need to put forth research and a proposal and criteria which is vetted in the public eye, and then that is put forth to Congress, and then there's a order of operations to go through.
We know that you're a big fan of talking about price, and we'll get to some of those questions later. But if you could only track one metric for the rest of your life, including using that as your metric that you operate your businesses based off of, when it comes to Bitcoin, would it be price or would it be some other metric?
Well, price is only a metric until hyper-Bitcoinization. And at that point, there is no price of Bitcoin. It's just sat. So, people like to joke at Bitcoiners saying 1 BTC equals 1 BTC. But there is some profound truth to that because that's really all that matters. That if the world is priced in sats, which is Bitcoin, then nothing else really matters because everything is using this system of measurement. So I guess the real measurement of Bitcoin that I would look at is adoption, like how many people are using Bitcoin, spending Bitcoin, and transacting it in economies around the world. And that's the difficult thing to measure because if Bitcoin functions as money, you should not have visibility directly. So it's sort of like a measurement that cannot be directly gauged, right? On-chain data is flawed because it only measures a certain dimension. And with Bitcoin layer 2s like Liquid and Lightning, a lot of that no longer is factored in. And Lightning has that privacy dimension to it, as does Liquid with confidential transactions. So it's almost like if Bitcoin succeeds, you're not going to be able to measure it empirically, but you're going to know because no one will accept anything but Bitcoin.
Hash rate is really running away, expanding at really eye-boggling rates. So are you a believer that hash rate precedes price? And if so, can you maybe explain the logic and why that would be the case?
Well, you could say that hash rate precedes price, and it is the case right now. But I don't think it is an indicator in the long run. Hash rate to me seems to more measure nation-state adoption for mining, because while countries don't necessarily declare it publicly, they are mining. And that was the case for Bhutan. We didn't know until they kind of got caught because they were involved in the Celsius case, I believe. So they can mine. And the reason why hash rate seems to be on a tear, in my view, is that it's countries mining that are price insensitive. They don't really care about the price of electricity because they're behind the meter. The energy is their own, and either it's curtailed and run off, or they can just say we'll use Bitcoin to mine, and it belongs to the state. So it doesn't matter really if the price drops or if the price goes up because they will mine regardless. And I think this will continue to be the trend in the future because energy production and Bitcoin mining are two sides of the same coin, because you need to be able to utilize energy. You have a lot of excess energy and you have to get rid of it somehow in certain situations. So energy companies will just become Bitcoin miners. And as we build more energy production facilities, then hash rate should logically keep following that growth trajectory. But there's also a danger, I think, to saying that hash rate and price are linked, because one day, maybe 50 years in the future, hash rate could taper off or drop off simply because it's not as economically viable to bring on miners to mine at that point when the subsidy is a lot lower or fees drop or various reasons. But that does not mean that the Bitcoin network is less secure, because it's almost as if we have an oversupply of hash rate, and the natural equilibrium could be a lot lower, and you can still have the same level of security too. So I think if you just say hash rate has to always keep going up, then you're opening the door for some future FUD attacks where, the media saying Bitcoin death spiral because of mining death spiral. But we can actually make do with a lot less hash rate. It just means maybe you make smaller transactions per transaction. You're not transacting 10, 20,000 coins, but you break that up into 10 transactions of 1,000, and you wait for more confirmations. But the Bitcoin network is very resilient in that regard.
Many investors think that Bitcoin's volatility is going to dampen as the total size of the asset class grows, because of the law of large numbers. But we're also dealing with something that we've never really seen before, which is a truly finite asset emerging in prominence. At the same time, we're seeing massive government money printing and deficits. So my question is, what do you believe? Do you believe that Bitcoin's price will be more or less volatile on a percentage basis as we cross this 100 plus trillion dollar asset class that we believe it's growing into?
So my thinking is that we will become volatile until hyper Bitcoinization, or maybe until we cross the 500,000 mark, 0.5 M. I don't really believe that there are diminishing returns for Bitcoin, simply because Bitcoin is a replacement for fiat money. So it's better to think of Bitcoin's growth as a phase transition from one state to another, from solid to liquid or liquid to gas. And it's just a replacement of a current system. So if Bitcoin does replace fiat, then why would there be diminishing returns? You don't really frame automobile adoption from the horse and buggy as diminishing returns. It is a phase change. We just went to automobiles and we stopped using horse and buggy except for recreational reasons, right? Like for fun. So if Bitcoin, it does do what I think it will do, then you kind of just replace everything, and everything is on a Bitcoin standard.
By holding Bitcoin as your store of value, and that this is how we run up to your, pretty popularized $1 million price target. I'm curious, when that happens, when we see that sudden jump up in price, which other asset class, ideally you would say something not in the crypto asset arena at all, but what other asset class do you expect to run up most alongside it?
So my theory is that maybe some Bitcoiners won't like this answer, but I think gold will run up, because the trading pair of the future is not BTC USD, but BTC XAU. Because at the very least, gold is a relatively finite asset that you can't manufacture out of thin air. The exact verifiable quantities, it's kind of TBD, but at least it's better than everything else. So I think if there is trading of Bitcoin, it's going to be against the ounces of gold rather than against dollars or yen or pesos. So with that in mind, you could expect gold would probably have a run. And maybe with the push for things like auditing Fort Knox, we actually have a better visibility on who has gold, and we kind of level up a bit. I think Tether and their product, Tether Gold, is probably a step in the right direction. They are far more stringent on how they're managing and tokenizing bars of gold than what is currently used to trade and value gold on traditional markets. Gold has a large, let's say, large place in society. and it does have history. So I don't think it'll disappear overnight like everything else. I think it'll hang on to, you know, hang on to the financialization aspects for some time. But I think Bitcoin will also demonetize gold when we hit probably 500,000, because at that point we're roughly half of gold's market cap. And the more modern thinkers or in investments and funds and institutions will likely start to reassess and reevaluate their gold holdings relative to Bitcoin holdings. So it's likely that we will demonetize some of gold's market cap. But gold, I think, will still hold out better than everything else. So I think it should revalue itself a bit more.
Curious if you've heard of this idea of a friendly 6102 in which the government raids Bitcoin holdings of MicroStrategy, now known as Strategy, but gives MSTR shareholders a premium due to their current share price and allows them to cash out without capital gains tax. Do you think there's any chance that the U.S. government attempts to confiscate Strategy's Bitcoin treasury? And do you have any thoughts on what this would look like and the likelihood of this?
That's interesting. So, Mason, where did you hear that one from? I haven't heard it before.
I think I brought this to Mason's attention. I first heard it from Rai Quant from the MSTR True North gang. And yeah, the idea is a friendly 6102 in that, yes, the government comes in and confiscates the treasury, but they're paying above asking price and they're letting you leave with those shares and sell out into fiat without incurring the capital gains tax. So like a super friendly exit landing pad for MSTR shareholders. But, ultimately allowing the government to seize the coin.
Well, in theory, it sounds friendly, but you have to ask yourself, if the government is in a predicament at which they need to do that, I don't think anyone would want the alternative. Like, sell Bitcoin for what is something I post from time to time. But, why would you want the dollars if they're in such a dire condition that they need to seize the Strategy Bitcoin? So I guess that's the answer.
I think it's similar to the historical 6102, where the government buys back the gold from you, and then you ideally, if you want gold or some other store of value asset and you want to get out of the dollar, you can do so quickly. But you obviously would have to race the government because they're going to revalue that seized Bitcoin up as they did with the gold reserves.
Yeah, I guess it's just a question. When 6102, the original 6102 happened, the internet didn't exist, so you can't really hear from dissenters and they can't coordinate. So it's just a question, does that work in this day and age, that you can do something like that and pull it off? It's a really TBD question, but I go back to it, if the government needs it that badly, you probably don't want the other thing that they're trading with you for. But then people that do hold MicroStrategy are kind of okay with that Bitcoin being financialized, so maybe it's okay for them because they're viewing it as part of fiat world, right? Otherwise you'd hold Bitcoin, you'd hold spot Bitcoin proper in your own self-custodial wallet.